All right, everybody, welcome back to the HPT Live Weekend Webinar. We're going to be breaking down a phenomenal week, guys. This was an absolute phenomenal week. Look at these past 5 days. When I look at these past 5 days, all what I see is perfect criteria for our day or for our trading strategy. We had one loss this week, which was Wednesday, which we'll break down. But all in all, the market has been extremely volatile and has provided great opportunity, fantastic opportunity for us to get in and out of the market with, right? So we're going to break right into it. First thing I'm going to do is put all my indicators on, and I'm going to show you guys which ones I use. The 9D EMA, the EMA clouds, the 50 EMA, the HPT crossover strategy, right? This is the 5 and the 21 when they cross over. This gives us an arrow, lets us know, hey, the market has just went from bullish to bearish, bearish to bullish. Eye on opportunity, right? We got the pit numbers. We have the 1 hour DEMA. I'm going to take this off and just so it doesn't crowd price action. And we're going to get right to it. All right, so Monday. Well, before we go any further, the purpose of this webinar, what I want to talk about, we've been really honing in on in the last month or two, has been execution and the importance of it, right? You are only as good as your ability to execute your approach. Consistent input means consistent output. If our true desire is consistent results, we need a consistent approach. And there's really no point in complicating that, right? A lot of traders complicate that, therefore they lose, right? They're all over the place and they start to get bad results. They, for whatever reason, maybe it's what they see online or, you know, it's just a belief that doesn't serve them, is that they need to predict what's going to happen, right? No, you do not. You literally just need to identify your approach, and when you do, you need to act on it without hesitation, without reservation. You are only as good as your ability to act on your approach, right? Think about it. If you are playing blackjack and the dealer deals you an ace and a king, if you do not put money down on the bet, you have no chance of making money, right? It's really that simple in hindsight, right? Like, if you see your edge and you do not put money on it, there is zero chance of you making money based on the strategy, which is your goal, right? So if and when you see your edge, you must put money down. If you're in for a penny, you're in for a pound. There's no point in complicating it. So coming into Monday, right, we were gapping up. These lines right here are critical levels. Blue line's PDH. Line below that is end of day, right? So we're literally gapping up above it, about $3 here. And open print established. Moving average cross right here. We rip down. Price comes up. We enter the market short on this candle with a stop above open print, right? So let's walk through this. This is what the market looks like when I'm going short, right? We took the market short right here. Notice the green bar here. The green bar has been disrespected. This becomes our area of interest. This is our I'm bearish until otherwise level, right? Buyers show up off the open, tons of volume. Sellers come in, disrespect it. At this point, we're in the market short and our stop is going above open print. Josh, what indicators can I use to help me execute on this? Give me more confidence in my entry. Look at the 9D EMA, the blue line. That blue line tells us something. It doesn't just tell us that we're in a bear trend or a downward trend. It tells us that the trend is healthy. Why? Because we are not extended from the trend. We're closing on the trend. Price is coming into the moving average. Sellers are respecting it. Therefore, the trend has a higher chance of continuing. And look what happened. Price continued. A lot of traders like, Josh, how'd you short into end of day here? What if buyers showed up? What if this? What if that? No what ifs, okay? When I see my edge with a healthy trend, I am in the market. This was a beautiful trade. We took her down until the market got a bit extended down here. Phenomenal setup, one and done. Okay? This is how I've been trading. Less is extremely more, right? I'm averaging anywhere from maybe 1.5 trades a day, meaning some days, most days, I'm only taking one setup. In terms of consistency, I am at the point in my trading where if I get a morning setup that pays me, there's really no point for me to keep getting back in and out of the market, right? It makes anybody vulnerable when you're consistently getting in and out of the market. It's not that we can't, it's just there's no point. Our edge is going to present itself tomorrow. You guys know we focus on morning trades, right? So that is literally what we've been doing. That was my only trade, literally, right here to right there. Absolutely killed it. But that's not to say that there wasn't great opportunity later in the day. I mean, it was phenomenal. Look at the bearish structure here. This was a beautiful day. What I really want to point out here is look at the 50 EMA. Flawless. Flawless. The 50 EMA is our guideline. Look at that. Price rallies into it, rejects, 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 sells off, lines up with structure. This was beautiful. This was an absolute beautiful day. But yeah, one trade for me. Let's go into Tuesday. So then we continue to get a massive sell-off, right? So once again, sell-off, sellers are in control. Josh, how do we identify opportunity in the morning? Well, number one, open print. Number two, moving average cross. And number three, green bar that's ignored, right? This was a beautiful setup right here. Looks pretty much identical to the day before it. Look at this. Open print, established. Once again, Josh, what can I use to give me confidence in my entry? That 9D EMA. Is that a healthy or unhealthy trend? Healthy. Look how healthy that trend is, right? Like this is like, and I'm telling you guys, this, I used to struggle immensely with entering and exiting and hesitation and waiting for more confirmation, right? Until I learned the market, the moving average principles and how to effectively apply them. It helps you so much with pulling the trigger, right? Because there's two types of traders. The first type's going to see this and go, I don't want to take it. It's only the second candle. Let's be patient, right? I'm going to be patient. And then this happens. And now you have no entry because there's no green bar present, right? And I'm not saying, hey, look, you're missing out. I'm just saying you literally got dealt an ace and a king and you bet no money on it. Like in terms of blackjack, you went full retard. In terms of trading, you went full retard. Like when I say full retard, what it means is your edge presented itself and you did not act. You are only as good as your ability to pull the trigger when you see your edge. Your edge is going to present itself. It's got an 88% chance of presenting itself. Out of 126 trading days, our edge presented itself 107 times in the last 6 months. Okay? That's an 88% chance that our edge is going to present itself. So when it presents itself, you now have an 82% chance of landing in a profitable trade. Why wouldn't you bet money on it? What else are you looking for is what I'm getting at. And don't take me the wrong way here, but it is extremely important that you're pulling the trigger when you see this. If not, now you have questioned yourself, you've questioned your strategy, you've questioned your edge, and it loses its value every time you do that. You lose respect for yourself, you lose respect for your edge, and you're disrespecting your future as a trader. Right? Like, once again, I'm going to say it 100 times. You are only as good as your ability to execute your strategy. This was beautiful. This was a beautiful trade. It was the third candle we ended up getting in. Stop loss above the previous candle. Once again, what really helped me pull the trigger here, guys, was that healthy blue line. We're not extended. We're closing on the blue line. This is not an unhealthy trend. There are some wicks. I don't care. What I care about is that this green bar was disrespected off open print. The EMA cloud is red. We bounced off the 50 in pre-market. Is this bullish? No, this is not bullish. Don't assume buyers are going to defend pre-market low and it's going to rally. Don't make shit up. Don't conjure in your mind. Instead, ask yourself, what am I seeing? Is it an ace and a king? Or is it a deuce-deuce, right? What do you want to put your money on? This is an ace and a king. Ace in the hole. You have to put money on this. This was absolutely beautiful. This is a beautiful trade right here. Great trade. Once again, one and done. Finito. Right? There's no point there's really no point in coming back to the market after having a trade like this. Right? Like I was saying earlier in this video, I'm literally averaging 1.5 trades a day, if that. This week, there were 2 days I took 2 trades, but other than that, it's one and done, one and done, one and done. Right? One and done. I show up, I bang the morning out, I get my criteria, I make my money, I'm out. I literally want to trade like that for the next 3, 4, 5, maybe 6 months. Really lock in extremely consistent results. And then, okay, maybe we start scaling, take it to the next level. Right? Like, you got to earn this shit. Right? It's not, you can't just have one good week and be like, oh man, I'm scaling up. No. Prove to yourself that you can execute flawlessly, because once again, you are only as good as your ability to execute your strat. The moment you start, overthinking, overanalyzing, second guessing, questioning, conjuring, bullshitting, going full retard, that's when you got to pull back and go, hey, what's going on? Why am I not believing in my approach? What does the data tell me? Do I trust me or do I trust the data? Right? Like, I've trusted myself for a long time and it didn't work. I started trusting the data, everything started to change. A really good price action, right? Look at this, nice green bar here, ignored, and then price goes back down, another green bar ignored here, and then notice buyers start pushing into this green bar. Notice sellers aren't respecting it as good as they can. This right here is the battle, right? Like, this little price action right here is a strong battle. Price comes up, we get a nice red bar ignored here. That'd have been a great long opportunity, back up into the open. Once again, playing your red bar, green bar ignored. All right, Wednesday. Wednesday was a tougher day, in my opinion. Just not the best price action, but I took 2 trades, 1 win, 1 loss. Let's break it down. So the first thing I want to point out is look at how effective. You see this yellow line right here? This yellow line is, hold on. Todd, what up, Brody? My boy Todd hopped on the mic. Todd, hop in if and when you need at any point, okay? All right, check this out. So we got open print. This is previous day open print. Price rallies from open print into previous day open print, okay? There were some traders that struggled this day, and I want to break this one down, right? Josh, what happens when my edge doesn't present itself? You do nothing. You do nothing. When you start forcing setups, adjusting, what's the word? Just trying to, be slick, right? Anytime your edge is not presented, this is chop. We took no trade, and my first trade was right here. There is no trade for me right here. Why? One simple answer. There was no RBI or GBI, right? And this is the power of waiting for an RBI or GBI. If and when you build the discipline and confidence to wait for the RBI and GBI, you will no longer get caught in this bullshit. This bullshit will cost you your dream. If you're not doing well as a trader, it's because you're forcing shit during this. So once again, our edge, our 3-step approach, shields you from trading in this bullshit. It is literally until you get an RBI or GBI, there's no trade, right? And I like it to be off open print. You can see here we ended up getting one right here. I took the market short around 574.50. It's crazy. Got almost $1.50 move, scaled out, and then I exited this position as soon as this red bar. Okay, so green bar ignored, short. Green bar ignored, trim. Stop above green bar. Boop. Stopped out, market rallied. Wasn't hurt whatsoever by this pop. Because I executed effective risk reward management. Right? This is how we have to trade. Choppy conditions tend to lead to larger moves, but they don't always, right? And this was a prime example of that. But the biggest thing I wanted to talk about is because I had a lot of traders messaging me saying, man, I got beat up. I got roasted in the morning. And this is the thing. It was only because they didn't trade the system. If they had traded the system, they would not have taken a trade during this morning nonsense. Therefore, they would not have had any losses. At the end of the month, when you're going through your journal and your losses look something like this, that is a direct indication that you are not following the strategy. If at the month you go through your losses and they only look like this, that means you are trading your approach perfectly. It just didn't continue. Which loss do you want? Do you want the chop? You want this to be one of your losses? Or do you want your repeatable approach to be one of your losses? Right? So, took that short. Didn't make any money. I think I made $40 on it overall. Because I ended up getting stomped out with time decay. But this second trade, I was really proud of this trade. I want to talk about this one. So I took the market long on this green candle, this 110 candle. I went long and I caught a move up in the high of day here and above. So let's talk about this move. Josh, why did you take the market long here? What was going through your mind, etc.? Right? So once again, we're coming into previous day open print, right? We get a red bar right here that was decimated, ignored, right? Red bar, green, blow past it. I wasn't able to get in this candle long because how fast it was, and I didn't want to put my stop way down below the red bar. So I didn't make a move. Price came back into the red bar, which was ignored, testing the buyers that decimated this zone. And when it did, I want to point something out to you. Look at the blue line. Okay? Hold on. It's very important. Okay, you see the blue line? So look how when this sold off, we were $2.50 away from the moving average. $2.50 away. So I decided to take the market long around 578.40 because based on the principle of the moving average, I can almost guarantee a $1.85 move in my direction just playing into the moving average. Because when you get a violent sell-off like this into an RBI, there is an extremely high probability that price is going to retrace back into that moving average. So in my mind, I'm going, hey, even if I could just get a move back into that moving average, I'm going to make 60% ROI on this trade. So I took the market long, got my move back into the moving average, put my stop below this red candle, and you can see it never broke it. It never broke it. Once again, the RBI coming through, providing phenomenal opportunity for us. I had to hold this trade for a little bit. I had to let it manifest. I had to let it digest a little bit, buyers versus sellers. But overall, the 1 hour time frame guided me, and so did my moving averages. This was a phenomenal trade. I did sell it a little bit early, but it was really good. All right, Thursday. Phenomenal price action Thursday. I took one trade, right? Once again, keeping things very simple. Price was selling off, didn't get any GBI, therefore no short play. Price started to rally up. I took the market long right here once this red candle got ignored, and I caught a $1.50 move. $2 move up to, I think it was previous day open print. Or yeah, it was this level right here. See? Guys see? Open print from Tuesday became my upside target. Men lie, women lie, critical levels do not. Right? So once again, beautiful move right here. Red bar ignored. Healthy trend. Josh, it's very far away from open print. Why'd you take it? Because it was a healthy trend. Healthy trends have a high probability of continuing for at least $1. Therefore, that is opportunity for me. Really good trade right there. Market ended up selling off. I couldn't get any opportunity there. That was it. But let's go into Friday. This was, yet again, another beautiful day. Yes. Friday was beautiful. We were live. I dropped my daughter off at school. 9:30, I hop on the live on my phone. And we capture a long play from here up to 575.50. I made the mistake and didn't take profit here. Although I was up around 60%. I think for whatever, I don't know what it is. Sometimes trading, my level was screwed up because I was on the phone. I wasn't able to see previous day open print. But I held the trade. I ended up getting stomped out on this candle, right? Break even, didn't lose money. I think I lost, I lost, I think it was like 12%. Honing in, not letting it go against me. And then once price continued to sell off, I was like, all right, listen, we're back below the 50. Right? Look at the edge here. I want to highlight. I mean, just look at this. Open print, red bar ignored, long. Back to open print, green bar ignored, short. Look at this. Red bar ignored, long. Green bar ignored, short. Green EMA cloud, red EMA cloud. Above the 50 EMA, below the 50 EMA. These are our tools. These are systematic, repeatable ways for you to spot your edge and execute appropriately. Beautiful trade. I think it was around 84% ROI on this trade. Just literally spotting simple, easy price action using open print, moving averages, and critical levels. So it was a phenomenal week this week. I'm very proud of this week, but this is the thing. I'm not worried whatsoever about next week. I'm not worried about anything. We've back-tested this strategy live for 6 months, going on 7. And on demand, I have back-tested this strategy back to 2015. This isn't a new concept. These principles apply, and they have for a very long time. You just didn't see them. I'm extremely confident going into next week. So is the team. Everybody on the team is doing extremely well. Everyone's posting member profits. Everyone's executing the way that it should. This is exactly what High Performance Trader was built for, designed for, tailored for, and created for. This is our purpose. This is what we're here to do. I'm extremely proud of everybody on this team. Keep up the good work. And if anybody has any messages or needs anything from me, just shoot me a message.